could the catalyst be to the downside, given that we are seeing more tightening moves around the world, whether it's Mexico's surprise rate hike today or the BOK now signaling policy normalization?
Interestingly, when we look around the world at these central banks, they're all looking at the economic recovery. And obviously, the strongest economic recovery we have seen is in China, especially coming out of COVID. So we shouldn't be overly surprised at the change of language we are seeing given improving economic data. Worth highlighting, though, that the PBOC is around 8 to 9 months ahead of other central banks in terms of where we are from a policy perspective. Also worth highlighting that when we look at how much stimulus the PBOC injected into the Chinese economy, it was roughly 6% of GDP versus 25, 30% in places like the US or Europe. So that 6% is a lot easier to digest. So that's, I think, what the market's really focusing on about when we're going to see a broad policy change.
And the markets, in the meantime, still deciding whether to go with cyclicals, value, or growth when we really don't know where these central banks are headed, especially across Asia. How do you position?
Yeah, exactly. So with the recent Fed commentary, it's the market's interpretation has been somewhat confusing. So if we were to see earlier than expected tapering, usually this means a recognition of inflationary pressures, which should see a higher discount rate. Therefore, it doesn't explain some of the flattening of the yield curve we've seen. Or if, for example, the market is concerned about premature tightening and tapering, this usually therefore means growth medium term is on the downside. The market should then be taking the sort of risk-off approach. Defensive names should be outperforming versus, let's say, the long-duration growth stocks. But this isn't the case. So again, just in this sort of range-bound area, just waiting for some further news. And we're probably in the phase where the Fed and the market itself is just waiting to gather more evidence about inflation and whether it's indeed transitory or more permanent.
How much concern should there be over the disruptive, and I don't mean sort of positively disruptive, but really fracturing nature of this slowdown, and whether we're going to be able to see, really through to the other side of the recovery in a consistent way?
It's very much on the back of the vaccination success, not seeing any further variants emerge. Again, then when we look at the disruption post-COVID, it's really sort of challenged the post-GFC single market dynamics, i.e., easy money, low growth environments, or also low interest rate environments. So again, it's that point about the market just being a little bit confused about these abnormal situation we find ourselves in, and again, which bits are transitory versus which is here to stay.
In terms of what we continue to see when it comes to the pickup in commodity prices, do you think that that's hit a peak, and how does that flow through to some of the very popular plays when it comes to mining names and the such?
Again, because we are seeing this economic recovery, we're seeing demand pick up. A lot of the corporates we've been speaking to have indeed confirmed higher input prices. So in this kind of market, the names you want to sort of own or be exposed to are those names, especially in commodities, that can pass their prices on to the end consumer. And again, that feeds back into the argument about whether inflation is transitory or a lot more permanent in nature. And we're more in the camp that it is probably more permanent.
Financials have been the big winners this year, right? As we continue to see that rotation to cyclicals, do they have more room to continue rising?
More than likely. So again, when we look at historically, let's take China as an example, when we see this kind of rotation growth to value, you usually start seeing the cyclical value names outperform first. Then as a category, you tend to see the financial names, which again, the banks have done well. And then the final stage of the rotation is your more traditional values, so utilities, telecommunications. So we're probably in this mid phase. But again, the market is quite choppy and volatile. We were going through that growth to value. Now we seem to be going back to growth. In this kind of market, what's key is ensuring the names that are in the portfolio really have that earnings certainty, again the pricing power, and good market share and strategies that can be executed and implemented.